Hello and welcome, grade 11 accounting students. Now, I know you guys are busy preparing for your exams. Some of you have already started. Hopefully, we can work together and I can help you, assist you as much as possible to get ready for that very important accounting exam. So let's get started. Now, guys, in today's lesson, we are focusing on reconciliations. Remember, recons was something that you guys completed in the first term. And when we talk about reconciliations in the exams, you can get tested on a bank recon or a creditors recon or a combination of the two. So I've chosen a question where we're going to be focusing on bank recon for the first half of the show, and then the second half of the show we'll be moving on to the creditors recon. As usual, grade 11s, I want you guys to work with me, so please make sure you've got paper in front of you, you've got some stationery, and you've got, very important, your calculator. So let's get started. Right, now let's go to our question. The information that we are given: the accountant of RCB Traders completed the following bank reconciliation statement at the end of August 2016, the end of the business's financial year. So we've got in front of us a completed bank reconciliation statement. Okay, so let's just quickly go through it. So we've got our balance as per bank statement, we've got an outstanding deposit, we've got some outstanding checks given to us, then there's a debit amount incorrectly credited, and then balance as per bank account general ledger has not been filled in. Okay, so we're going to go now straight to the questions on this bank reconciliation statement. So let's get started. Right, guys, so the first set of questions that we're going to be focusing on are multiple choice questions. So let's look at 1.1. The balance as per bank statement, entry A, is as a result of. So we've got various choices. So let's just quickly go look through it. We've got a debit balance as per bank statement on the 31st of August 2016. B, a credit balance as per bank statement on the 31st of August 2016. C, a debit balance as per bank statement on the 1st of August 2016. And then they've got alternate D, none of the above. Right, so let's go to our bank recon and let's just look at entry A and let's examine entry A carefully before we can choose our correct option. Okay, so entry A, the balance as per bank statement. Okay, so let's just look at that balance very carefully. Right, so I've got entry A, I've got an unfavorable balance as per bank statement, 25,000. Right, now immediately, guys, bank statement. Remember, a bank statement is obviously prepared by the bank. In other words, it's what we call an external document. It comes from the bank itself at the end of the month. Now remember, the way in which your bank statement shows the entries of the business is very different from your bank account. In other words, your general ledger account. So an unfavorable balance as per bank statement immediately represents a debit balance. Okay, I'm going to say that one more time. Unfavorable on the bank statement represents a debit balance as per the bank statement. And we know that the bank reconciliation statement is prepared at the end of the month, the 31st of August. So immediately, if we go back to our options that's given to us, okay, unfavorable balance, if we look at option a debit balance, so that's correct, as per bank statement on the 31st of August 2016, which is obviously the end of the month. So from the looks of it, immediately I can see that alternate A has to be the correct answer. Right, if we look at the other alternatives given, alternate B, a credit balance, so immediately that is incorrect. Alternate C talks about a debit balance, but it talks about the beginning of August, the 1st of August. So immediately, that is obviously incorrect. So the correct answer is A. Okay, you guys with me? Right, let's now move on to the next question. Another multiple choice question. So remember, guys, even though it is multiple choice, it's not a matter of just correcting or choosing, the correct entry. You've got to obviously make sure you understand the question and you refer to the relevant information. Okay, 1.2, refer to check number 43. So we're going to do that in a moment. We need to refer to a check. The check was made out to the animal shelter as a donation. It has been treated incorrectly in the bank reconciliation statement and should be dealt with as follows. Right, now before we look at the alternatives, let's quickly go to check number 43 and let's firstly look at why has this been treated incorrectly. They're telling us it's been treated incorrectly. We need to identify why it has been treated incorrectly, and then how do we now deal with this particular check. Okay, so let's go back to our bank Recon statement and let's look for check number 43. Right, so I've got outstanding checks, and there's my check number 43, issued on the 5th of January 2016 as donations. Right, guys, I'm going to give you a minute for you to maybe discuss with one another, with the person sitting next to you, as to why this entry should not be in this bank recon's statement. So I'm going to give you guys a minute to do that, and your time starts now. Okay, guys, time's up. Let's see whether you were able to work this one out. Now, remember, the check was issued on the 5th of January, and we are currently on the 31st of August. So immediately, guys, we can see that this check is obviously stale. Okay, it's a stale check. In other words, this check is older than 6 months. Because if you look, 5th of January, the check should have been cashed by the 5th of July. So clearly, this check is stale. Stale, in other words, it's older than 6 months and it can no longer be cashed at the bank. In other words, it's an invalid check. So this amount of 2,000 Rand should not be on the bank reconciliation statement. Now, how should we deal with this check? What should we actually do with this check itself? We need to obviously cancel this check in the CRJ. Okay, remember we've done this. You've done this a number of times in class. So this check should be cancelled in the CRJ, and the two accounts that will get affected will be the expense, donations, and your bank general ledger account. So those are your two accounts affected. Right, so let's go to our alternatives and let's just look at which correct alternative we are going to now choose. Okay, so we are given the following. So how should this now be dealt with? A journal entry made in the CPJ, so immediately we know that is incorrect because we're now cancelling a check. And if you're cancelling a check, you cannot cancel it in the CPJ. So alternate A, definitely incorrect. A journal entry in the CPJ, again, CPJ, so that clearly has to be incorrect. Okay, let's now look at C. A journal entry in the CRJ, so immediately C I need to look at. D also talks about a journal entry in the CRJ, so I'm going to look at D as well. So it's obviously between C and D, but let me now read further. So a journal entry in the CRJ, bank will be debited and donations will be credited. Okay, so immediately, let's look at the two accounts that will get affected. Now, remember, guys, if you are canceling a check, it means your bank account, previously you credited bank because you issued the check. But if you now canceling the check, immediately your bank general ledger has to be debited. So this is obviously correct as well. Donations will be credited. Now, once again, previously, when you issued the check for donations, you debited donations because it was an expense. Now, because the check has never been cashed, you now need to cancel this entry. So, in other words, you would then have to credit donations. So, this is definitely correct. So, from alternate C and D, it has to be alternate C, because if we examine D, yes, the first part is correct, an entry in the CRJ, but here they're telling me bank will be credited, which is incorrect. Donations will be debited, which again is obviously incorrect. Okay, so the correct alternate will be alternate C. Okay, right, let's move on to our next question. Next question, our third multiple choice question. So this time around, guys, I'm going to read the question and then I'm going to give you guys some time to figure out which is the correct alternative. Okay, so here goes. 1.3, a possible entry in the bank statement resulting in entry D on the bank reconciliation statement. So in other words, something that appeared in the bank statement resulting in entry D on the bank reconciliation statement. So let's go to entry D. Let's firstly look at entry D and then we'll look at our alternatives given. Okay, so entry D further down, you've got debit amount incorrectly credited for 2,000 Rand. Debit something that was incorrectly credited an amount of 2,000 Rand. So I want you guys to look at this. I'm going to give you guys probably 30 seconds to look at this. And then I'm going to put up the alternatives so that you can choose the correct alternative. So in total, I'm going to give you guys 2 minutes. So 30 seconds to look at this line. And then I'm going to put up the actual question. Okay, so 2 minutes, guys. Your time starts now. Okay, guys, welcome back. Right, let's look at the question one more time, and hopefully you were able to figure this one out. Okay, so I'm going to go back to information D. Right, let's look at what happened as far as this entry is concerned. Now, remember, the bank statement debited something that was previously incorrectly credited. Now, what does this mean? It means that the bank made an error. So in terms of the actual error that was made, in error, the bank credited RCB's account with an amount of 2,000 Rand. Now, in plain and simple terms, what does this mean? By mistake, the bank deposited 2,000 Rand into RCB's account. So debit amount incorrectly credited simply means take away the 2,000 Rand that we gave you in error. Okay, so you guys understand. By mistake, the bank deposited 2,000 Rand into the account of RCB traders, and the bank is now debiting this amount. So if we go to the alternatives, okay, so let's look at the alternatives given. The bank incorrectly cashed, paid out a check issued by RCW traders. Okay, so immediately the bank incorrectly paid out a check. Now we know that didn't happen. The bank obviously deposited money into RCB's account in error. So it definitely cannot be alternate A. Right, let's now look at alternate B. The bank incorrectly deposited cash sales, 2,000 Rand, belonging to RCW traders, so 2,000 Rand belonging to another business, into the account of RCB traders. Right, so immediately the bank obviously credited, they deposited 2,000 Rand belonging to another business into RCB traders account. So this entry would then result in the bank or in us debiting on the bank reconciliation statement, so debit the incorrect credit that was made. So immediately it has to be alternate B. Right, let's look at why alternate C will be incorrect. The bank incorrectly debited RCB traders twice for the monthly insurance debit order. So we know that it cannot be C, because if you look at a debit order, if the bank has debited you twice, then you would then ask the bank to credit incorrect debit, not debit incorrect credit. Okay, right, so hopefully you were able to get this one correct. Okay, guys, let's move on. Right, 1.4. I think before we actually do 1.4, I know we haven't taken a break, so I think let's do that. Let's take a quick break, and then we'll look at the next question on bank reconciliations. Okay, see you guys now. Welcome back, guys. Right, let's move on with our revision. 1.4 wants us to calculate the bank balance as per the general ledger on the 31st of August 2016. Right, 4 marks for this particular question. So let's show a bit of calculation so that if we make a mistake, you can obviously get some part marks. Okay, so let's go for it. Right, back to our bank recon, and we can clearly see the balance as per bank account general ledger hasn't been given to us. So let's now do this calculation. Okay, quite a straightforward calculation. So just make sure, guys, 4 marks, quite a bit. So make sure you get this one correct. Right, information A, we've got unfavorable balance as per bank statement. So immediately, an unfavorable balance as per bank statement means that this is negative, a negative 25,000. Okay, you guys with me? Right, so in brackets, I'm just going to put a minus sign. Right, then we've got an outstanding deposit. Outstanding deposits, a deposit I know is something positive because money is going into my bank account. Right, outstanding checks, immediately outstanding checks would obviously decrease my bank balance. So these amounts would be, again, negative amounts. And if I look at my outstanding checks, I've got 3 outstanding checks. But remember, guys, we've dealt with check number 43 already, and this amount will obviously not be shown in my general ledger because I'm obviously going to reverse the entry itself. You guys with me? So I'm just going to cross that one out. I'm going to leave that one out. Right, so I've got check number 89, so the 5,000, that obviously is negative. Then I've got check number 93, which is also going to be negative. Okay, you guys with me? Right, then entry D, debit amount incorrectly credited. So remember, debit obviously means that that is negative because money is going to be coming out of my bank account. So I'm going to put a minus sign there as well. Right, so let's do this calculation now together, and I'm going to explain one more time as I'm doing the actual calculation. So we've got an unfavorable balance as per bank statement, 25,000. Okay, so we've got a 25,000, which is obviously unfavorable. So I'm going to add up all my negatives. Okay, so 25,000. Right, then we've got our checks, which are also negative. So I'm going to add another negative, okay, 5,000. Instead of putting negative signs, I'm just adding up all my negatives. Then I've got another 4,500, so plus 4,500. And then I'm also going to add 2,000 because that is negative. Right, so in total, I've got negative 36,500. I've got one positive, which is my outstanding deposit. So I'm just going to subtract the 30,000. And then I've got an amount of 6,500. And remember, this amount would obviously be negative. So I'm going to put that in brackets, 6,500. Okay, you guys with me? You've done this calculation before. It's not a difficult calculation. So my balance as per bank account general ledger is a negative 6,500. So let's fill that in. Okay, so it's negative 6,500. Right, guys, remember, I've gone through the calculation, but when you are given an answer book, please make sure that you show your calculations. In other words, how you got to the 6,500. You guys with me? Right, so let's move on to our next question. Okay, the next question, this is actually our last question on Bank Recon, so 1.5. Refer to outstanding check number 93. Briefly explain the treatment of this check when preparing financial statements. You must be specific with regards to the impact this has on the financial statements. Also mention the GAAP principle used for the above adjustment. Okay, right, so quite an interesting question. We've got an outstanding check, check number 93, and in terms of the question, we need to show how we would treat this particular entry or this particular check when we are preparing our financial statements. Now remember, guys, which financial statement are we talking about? It's obviously your balance sheet. Okay, so what I want to do is I want to go to the information. I want to obviously draw your attention to check number 93. And then I want to give you a minute to try to figure out, if I was preparing the balance sheet, which 2 items in the balance sheet will now get affected with this particular entry. Okay, so let's do that. Let's go to the information. Okay, so check number 93. Let's just quickly change the color there. So there's check number 93. It's dated the 6th of September 2016, and it was issued to a creditor. Okay, so I'm going to give you guys a minute. I want you to look at this particular entry and try to figure out which 2 items in the balance sheet will get affected with this particular entry. Okay, so a minute, your time starts now. Okay, guys, time's up. Right, let's look at check number 93. Remember, it is dated for the 6th of September 2016. And remember, guys, from the information given to you, your financial year ends, okay, end of August. The financial year ends on the 31st of August. And in terms of this particular check, it's obviously going to be paid after the financial year. In other words, on the 6th of September. Now, before you mention it's got to be the matching principle, it's actually not the matching principle, guys, because in terms of this entry, the principle, the GARP principle that we're going to be using is the concept of prudence. Because remember, when preparing your balance sheet, okay, you don't want to overstate certain items. So this amount of 4,500, we're going to make an entry or an adjustment in the financial statements because of the GARP principle, prudence. So let's just explain that further. So let's go to the actual answer sheet. Okay, so we can obviously talk about this on the actual answer sheet itself. Right, so the principle that we are using is the GARP principle prudence, and the reason for this is as follows. Okay, treatment and impact on the financial statements as at 31st of August 2016. So remember, guys, prudence, we don't want to overstate, okay, amounts in our balance sheet. So which two items are going to get affected? Now remember, the check was issued to a creditor. Okay, so if we look at the two accounts that would have been affected when the check was issued, one account is obviously your bank account, and the second account, the check was issued to a creditor. Now remember, guys, when we issued the check, your bank account, obviously bank was credited, and creditors control, because creditors are liabilities, you would have obviously debited your creditor because you thought or you made a payment to your creditor. But because we do not want to overstate these amounts, we are now going to reverse this particular entry. Okay, so what do we mean by reverse the entry? If we previously credited bank, we will now debit our bank account. Right, because we debited creditors, we will now credit creditors control. In other words, how will this now impact on the actual financial statements? Okay, remember, guys, this was basically an explanation. So in terms of your financial statements, let's start with creditors first. So creditors is shown under trade and other payables. Okay, so what now will happen to trade and other payables? So by crediting or by reversing this entry, it simply means you will now increase. So trade and other payables will increase by 4,500. Okay, why increase? Because remember, guys, when you debited creditors, you obviously subtracted that amount of 4,500. If you're now reversing the entry, it simply means you're now adding 4,500. You guys with me? So trade and other payables will increase by 4,500. Right, now let's look at bank. Now remember, at the moment, bank is a liability because bank is an overdraft. Okay, so because bank is an overdraft, when we debit bank, we will now decrease our liability. It must seem as though we never issued this check in terms of the balance sheet. So our bank overdraft, okay, so your bank overdraft will decrease by 4,500. Okay, so in other words, what we've done here, we've actually reversed the actual entry. Okay, so we've reversed the entry. Right, another very important question. You will definitely see this, if not in your June exams, definitely in your November exams, and it's often a common question in your metric exams. Right, guys, so I think we've come to the end of the first part of the question. So we're now ready to tackle our next question on creditors recon. So let's go to the information first, and then we can get started. Right, the next part of the question, creditors reconciliation. So remember now, guys, it's a completely new question with obviously a different business. AB Stores buys goods on credit from Virat wholesalers. You are provided with information from the records of AB Stores for the month of October 2015. Right, now even before I read on immediately, AB Stores, this is the business, and Virat Wholesalers, this is obviously the creditor. Okay, so that's the first thing you need to do. And I cannot emphasize on how important this is, because often we find when we're marking papers that students often confuse the business. In other words, you are the accountant for a particular business, and they confuse the business's name with the name of the creditor. So make sure you do that immediately. Right, so let's read on. Information 1. The statement received from Virat Wholesalers on the 30th of October reflected an outstanding balance of 12,540. Okay, so that is on the statement that we received from the creditor. Information 2, the creditor's ledger of Virat Wholesalers. So creditor's ledger, immediately this is obviously our records of Virat Wholesalers in the books of AB Stores, shows that only 5,350 Rand was due to Virat Wholesalers on the 31st of October 2015. Right, so immediately we can see, according to the statement, this is obviously our external document. Creditor's ledger is your internal document. Immediately, there's a huge difference between the amounts owing. So according to the statement, we owe 12,540. According to our records, we owe 5,350. So immediately, there's a need for some type of reconciliation, checking and making sure that all the information was processed correctly from both parties. Okay, you guys with me? Right, so what I'm going to do before I look at the actual errors, okay, so from information 3 onwards, we've got our errors. Let's quickly go to our answer sheet so we can look at exactly what is required in terms of this question. Okay, so on our answer sheet, guys, the first part to this question, reconcile the balance on the creditor's statement received with the creditor's ledger account of Virat Wholesalers by completing the table below. Indicate negative amounts in brackets. Okay, so the table, looking at the actual table given to us, we've got a creditor's ledger account. So this is obviously what we've prepared, our internal document. Statement received is what came from the creditor. In other words, it's an external document. The balances are filled in for us. So we're going to now reconcile the statement to the creditor's ledger. Right, I think it's time for another break. So when you guys get back, we will obviously complete this question. Welcome back, guys. Right, let's reconcile this creditor's ledger with the statement received. So let's go back to our information. Right, the first error. An investigation revealed the following. Returns recorded as 820 Rand in the creditor's ledger was showed as 280 Rand on the statement received. The amount on the statement is correct. Right, now guys, the first thing we need to do is ask ourselves, who made the error. Did we make the error or did our creditor make the error? Now, in terms of the information, the statement is correct. So in other words, unfortunately, the error was an internal error. We made the error. So what did we do incorrectly? Returns recorded as 820 in the creditor's ledger was shown as 280 on the statement received. So in other words, 280 is correct. We recorded the amount as 820. So there's our error. So returns was obviously overstated. Now remember guys, when we talk about returns, obviously a return decreases the amount that you are owing. So we obviously subtracted too much. Okay, you guys with me? Right, so let's look at the difference. Okay, let's get the calculator out. So we've got 820 minus the correct amount, 280. So in error, we subtracted 540 too much. Right, so how are we going to fix this? Right, we subtracted. If you subtracted too much, you now need to add back the difference of 540. You guys got that? Right, so let's do that. Let's go to the answer sheet. Okay, so on our answer sheet, remember we made the error, so we're now adding back 540. Okay, right, details I'm not too worried about because here it's simply an explanation. So returns were overstated. Okay, so we subtracted too much and we're adding back 540. Right, let's move on. Okay, next bit of information. An invoice for 4,200 Rand received from Virat Wholesalers was incorrectly recorded as a credit note by the creditor's clerk of AB Stores in the creditor's ledger. So once again, it was incorrectly recorded by the creditor's clerk of AB Stores. In other words, it was an internal error. We made the error. So let's firstly look at the error itself. What did we do incorrect? Once you understand the error, then you go about fixing the error. Right, invoice means we bought on credit. So immediately invoices are obviously going to increase the amount that you are owing. Now in error, instead of adding 4,200 in error, we've treated this as a credit note. So remember guys, a credit note indicates that you returned goods. And when you return goods, obviously that decreases the balance you are owing your creditor. So you bought on credit. So instead of adding 4,200, so I'm just going to draw a T account here. So you've got your particular creditor. Instead of adding 4,200 by mistake, we treated this as a debit note. We subtracted an amount of 4,200. Right, now watch how I'm going to correct this error. Remember, this is obviously the mistake. This is the error that needs to be corrected. If we now add 4,200, okay, all we're doing, guys, is we're fixing our mistake, the incorrect debit that we obviously made. We need to obviously now double this amount. So we need to add back 8,400, okay, because obviously the first 4,200 is to cancel the mistake that we've made. And the second amount of 4,200 reflects the correct invoice that should have been correctly credited. Okay, so this is where you're going to double the amount and you're now adding a total of 4,800. So let's do that on our answer sheet. So once again, we made the error. So we're now adding, okay, let's just go back there. Okay, so we are now adding 8,400, okay, because of the invoice. Okay, right, let's go back to our information sheet and let's look at our next error. Okay, the next error, guys. An invoice received, let's just get a pen out again. An invoice received from Virat Wholesalers was correctly recorded as 4,400 Rand in the creditor's ledger. Okay, so it was correctly recorded in the creditor's ledger. So this time around, we haven't made a mistake. We recorded this correctly in the books of AB stores. But the statement received showed this amount as 400 Rand. So immediately, the statement, the external document, is obviously incorrect. That's where they made, or this time around, they made the error. Right, so what did they do incorrectly? Once again, we're dealing with an invoice. So we bought on credit for 4,400, but instead of showing this amount as 4,400, the amount is only reflected as 400 Rand. So how are we going to correct this? We're obviously going to use the table, and we're going to indicate that they've understated the amount. In other words, they should now, or we need to add on 4,000 Rand in terms of the table itself. So it was understated by 4,000. Right, so let's do that. Let's go to our answer sheet. And remember, they made the error. So we're going to tell them, you made an error, you now need to add 4,000. Okay, right, simple, guys, not difficult. Okay, let's go to the next bit of information. Okay, right, the next info. A payment of 5,000 Rand made by AB stores appears on the statement received. So you've got a payment for 5,000 Rand, it's appearing on the statement. The statement also reflected a discount of 250 Rand for early payment. AB stores did not record the discount in the creditor's ledger. Right, so once again, you need to ask yourself who made the error. So on the statement, we've got a discount, or we received a discount for 250 Rand, but for some reason, we did not show the discount in the creditor's ledger. So immediately, it's an internal error. We've made the error. Now, it could be we were not aware of the discount, or the creditor's clerk simply forgot to include the discount amount. Right, so we're now going to include the 250, and remember, guys, just be very careful. A discount obviously decreases the amount that you are owing. So the 250, we're going to obviously show this in brackets. Right, so let's do that. So let's go to our answer sheet. So creditors ledger, we're going to minus, so they want us to show negative amounts in brackets, so 250 in brackets. Okay, right, let's move on. I think we've got one more error to look at, and then we can check whether this balances. Okay, there we go. Right, a payment of 2,500 Rand to Virat Wholesalers was made on the 30th of October 2015. Virat Wholesalers balances their books and processes the statement by the 27th of October 2015. Right, so clearly we can see there's a timing difference. Right, we close our books obviously at the end of the month, but the creditor, on the other hand, because they've got to obviously post the statements, so they close slightly earlier, 27th of October. So there was a payment made of 2,500 that is not on the external document. Right, and once again, a payment obviously decreases the amount you are owing. So let's do that. Let's put this amount on the actual statement. Okay, so statement received, they need to obviously subtract, or let's just use brackets, 2,500. Okay, right, so let's now check whether this now reconciles. And remember, if it reconciles, it means our totals need to be the same. So let's do that quickly. We've got a bit of time. Okay, so if we can work together. So we've got our creditors ledger, 5,350 plus 540. Then we've got another plus 8,400. And then we're going to minus 250. And that gives us 14,040. Okay, right, let's now go to our statement received. So on the statement, 12,540 was the balance on the statement, plus they didn't take into account that invoice, 4,000, minus the payment that they haven't taken into account, 2,500, and that gives us 14,040. So in other words, guys, we've obviously reconciled our statement to our creditors ledger. Okay, right, we've got just over a minute, so I'm going to try and quickly do the next question, which shouldn't take more than a minute. So let's see whether we can do this. Right, the internal auditor recently discovered that the creditor's clerk sometimes purchases items for herself on credit and records these as business transactions. So a bit of dishonesty here, obviously a bit of sneakiness by the creditor's clerk. Suggests 2 internal controls which will prevent the above from occurring in the future. Okay, so a bit of internal controls, guys. Right, so the creditor's clerk is obviously buying something for herself and recording this as business transactions. So immediately, the first internal control, she should not be allowed to order items on credit if she is also recording the items. Okay, so immediately the person that orders the stock or orders items should not be recording transactions in your financial records or your ledgers. Right, that's the first internal control. The second internal control, you should only have certain authorized personnel that should be responsible for ordering stock. And obviously, when you order stock, often it needs to be authorized by a senior person in management, maybe the owner itself. Okay, so 2 internal controls that I've mentioned. Obviously, guys, we've just run out of time, so you can discuss this in much more detail in class now. Hopefully you have some time to discuss this. But as far as I'm concerned, unfortunately, time has run out. So it's time for me to say goodbye. And from me, Mahesh Lal, all the best for your upcoming exams. Good luck, God bless, and see you guys soon.